Hello, everybody. Today I wanted to make a reflection about Henkel, the German company. They've been very good in recent months because they've done a divestiture of the non-strategic private label business in the United States. They've kept the margins up, they cut costs, and they honestly kept investors at bay. But is that enough? Is that enough progress? No, it's not, because at the end of the day, both their European and American business is suffering loss of volumes, partially because they're losing market share, partially because of destocking by retailers. And at the same time, Asia and LATAM, which are doing okay, are not growing fast enough to counterbalance the losses in the other Western markets. So the question is, what can Henkel do? I think Henkel might be next on the shrinking for growth. They might get rid of some of their less strategic parts of the portfolio so that they can focus on investing in innovation for the faster growing, better margin position brands and product lines that they have. Right now, it's the industrial adhesive which is actually driving the results, both in terms of margin contribution and top line contribution. And the consumer brands are lagging behind. And among those, there might be some candidates for pruning, for divestiture, like some of their smaller laundry lines who really don't have a strong differentiated positioning. They don't have a lot of margins, and so they're probably not worth investment. On the other hand, they also have some hair care brands which are more regional and suffer when not distributed by the muscle of Henkel because they really can't do much in, let's say, third-party markets. And at the same time, a similar story can be told for some of their professional haircare business, consumer products, but professional lines, because they don't really neither share a platform with other consumer businesses from an innovation point of view, nor they add technological development that can be shared by other brands. So they require a dedicated effort that at this stage might not be actually strategic or affordable in other ways. So the bottom line is that there might be some candidates, more regional brands, brands with lower margins, but it's always important to balance that view with the strategic medium-long-term approach, in the sense that we don't want to create competitive gaps in the medium term just to have more resources in the short term. And of course, the more we cut, the less scale we have, and therefore there is an impact on the remaining brands, because the lesser scale increments the cost for the remaining products within the portfolio, and that's clear. So this is my view on Henkel. I'm curious to know what you guys think about it, whether you have thought about it, whether you have different approaches, whether you agree, disagree. Please leave everything in the comments. And of course, let me know if there is anything you want to discuss. Thank you very much, and I'll see you soon. Bye-bye.